So welcome back. We are on the part 2 of the question solving under IAS 2. So if you've not checked out the first question we solved on IAS 2 inventory, find a link below to check it out. It is quite simple as compared to this. So without wasting my time, let's dwell into it. So we have another interesting question here. This is another past question from Institute of Chartered Accountants, Ghana. And I'm sure by the time we finish solving this question, your understanding of IAS 2 will be more practical, will be more solid, right? So so we have Obuasi. We have Obuasi Limited. So Obuasi Limited produces a single product on July 31st, 20x5. The finished goods inventory consisted of 4,000 units. So this is finished goods inventory valued at 220 per unit. Okay. And the inventory of raw materials. So they've given us the inventory of raw materials as at the same date. For the month of August 20S5, the books of accounts show the following. So we have raw material purchases, we have direct labor, we have selling cost, we have depreciation, and then so on. Let's look at the other information. 8,000 units of goods were produced during August 20X5. So they are saying that during August, 8,000 units of these finished goods were produced. But these 8,000 units, it is left to us to find the value of that 8,000 units. Are you getting the picture? We know that 8,000 units of goods were produced, but what is the total value that was incurred in producing this 8,000 units? That is what this information here will help us ascertain. Okay, the value of raw materials on August 31st, 20x5 amounted to, so August 31st amounted to 600,000. So this is closing inventory for raw materials. This is a closing stock. This is a closing stock for raw materials. There was no work in progress at the start of the month. However, on August 31st, the value of work in progress is approximately 250,000 Ghana cedis. 5,000 units of finished goods were available in inventory as on 31st August 20x5. Required. Calculate the value of closing inventory of finished goods as on August 31st, 20x5 based on weighted average cost method. Do you remember that in our previous chapters, we mentioned that one way of value inventory, the cost formulas, one of the cost formulas is weighted average cost method, right? That is a way we use in value inventory in our books. Now, this weighted average cost method says that if we want to use this method to obtain the price or the value per unit of what? Per unit of the product that we are selling, what you have to do is that get the total value and divide it by the total number of units. You get the price per unit or the value per unit. And that is what this question wants us to do. So they've given us a sample, they've given us the data. So let's see how best we can solve that. So let's find the cost of production for August. Cost of production for August. Do you agree? Okay. So we have Ghana cedis here. Now, if you take the cost of production, there was opening. So I'm focusing on raw materials first. So we have opening raw material, because obviously if we are coming to produce, we enter into a new month, we'll look at the closing inventory from the prior year. Sorry, from the prior month. Is that not it? We'll bring it in. We see the purchase history, add it. If there's any form of closing, we subtract. So the opening raw materials from the prior month, which is July, is 540. So that will be 540,000. Then we add purchases. That was during August, right? So the purchases is 845,000. So the purchases is 845,000. All right. Now, when you look at the additional information, they give us some closing stock. We can add a closing stock to it. So we are going to less our closing stock. Less closing stock. So stock, closing stock. So the closing stock is 600,000. So get your calculator. So we are going to have 540 plus 845 minus 600. So this will give us the raw materials consumed, 785. So that is raw materials consumed for the month. Don't forget, the data they give us was for August. So we are looking at the raw materials consumed for the month of August. Now, the next one is direct labor. Do you think we'll add direct labor? Yes, we are going to add direct labor, of course. So direct labor, the wages that we pay to those direct labors, we are going to include it. That's 735,000. Then selling cost. Do you think we are going to include selling cost? No. Selling cost is used under NRV. I've explained more of this under our first question solving, right? Then depreciation on plant and machinery. Cost of conversion. You know, when you use plant and machinery, for production of your finished goods, that form of depreciation is a direct cost. It's a direct cost, so it must be added to that cost of production. It's a direct cost because that is what you are using for, and it is because of the finished goods that you are using that machinery to produce that is causing the depreciation. So it's a direct cost, so you have to add it to it. So depreciation. So the depreciation here gives us 80,000. Are you following? Distribution cost. Do you think distribution cost will come in? No. But what about factory? Distribution cost is associated with selling. Is that not it? And we are not talking about selling. We are looking at the cost of production. We are looking at factory. So factory manager salary. Yes, you have to add it. Factory manager salary. Salary. How much is it? That is 47,600. Indirect labor. Yes, indirect labor. You have to add it. So the indirect labors are more like the supervisors, right? They are the supervisors. They are not directly related to the production of that product, but they were involved in that. They were still at the factory. So we have to include it. So 148,000. Then we have indirect material consumed. Indirect material, that is also 45,000. So an example of indirect material, let me give you an example. With those materials, you cannot easily see them, right? Let's take an example, an illustration. Let's say you are into the production of furniture. Okay, now you use glue, right? You use glue to sometimes put together two different parts. But realize that when someone takes the product, the person will not see the glue, but the glue was in there. The glue was played a role in you combining that particular product together. Are you getting the picture? But when you talk about direct material is like the one that is obvious. When you're producing furniture, wood, the nail, you see, those are obvious. So those are direct materials. Indirect are those that you cannot easily trace to the production of the product. Then we have other production overheads. Other production overheads. So this includes the lighting, the heating, and all that. So we have 84,000. Other accounting costs. This is other administrative costs. And then other administration overheads. We are not including this one. They agreed. We are not including this ones. Okay. So we are going to add all of this. So we have 785,000 plus 735,000 plus 80,000 plus 47,600 plus 148,000 plus 45,000 plus 84,000. So we are having 1,924,600. We are having 1,924,600. My video is showing at the right corner, so it is blocking the number, right? But then, so I'm taking it to the next page, okay? So we are having 1,924,600. Now there is something in there. We are not done. So stay. There is something in there. So we are having 1,924. We are having 1,924 1924 600. Now, they mentioned that there was work in progress in the month of August 31st. There is a closing work in progress. Do you think it must be part of the finished goods? No, it has not yet reached the finished goods stage. So any form of work in progress that we had during the month of August must be subtracted. So we are going to less work in progress. And that's going to give us 250,000. 250,000. So we have 1924 600 minus 250,000. That is giving us 1674 600. So this is actually the cost of the 8,000 units. So this is the cost of 8,000 units of finished goods produced in August. I get to the picture. So from raw materials, we look at all the expenses, all those expenses. We added all those costs. We added all of them to ascertain the finished goods produced. Is that not it? Now, at this point, let's take finished goods. They mentioned that they are valuing the inventory using weighted average cost method. So first of all, let's look at the opening finished goods. The opening finished goods, okay? Let's look at the opening finished goods. So let's look at units, right? And let's look at the value. So let's look at units and then the value. So the opening finished goods, look at the preamble. This side, 4,000. So they mentioned that on July 31st, 20x5, so July 31st, we are in August. So the closing for July is the opening for August. Is that not it? So the opening finished goods, that's 4,000 by 220. So 4,000. So the units are 4,000. Is that not it? So 4,000 here times 220. That will give us 880,000. And then the production for August actually, that is 8,000. They agree because it said it over here. This is it. It mentioned it over here, 8,000. Additional information 8,000, right? So 8,000. And then what was the total cost? The total cost was what? 1,674,600. So let's add these two. So we are having total of 12,000 units. And then we are having plus 1,674,600 plus 880,000. That is 2,554,600. Now, what did the question say? The question said, compute the value of closing inventory. Compute the value of the closing inventory of finished goods as on August 31st, 2025, based on weighted average cost method. And I mentioned that when you talk about the weighted average cost method, what you are looking at is that obtain the total value, right? To know the cost per unit, obtain the total value, obtain the total quantity, divide the total value by the total quantity, and then you will know how much you are pricing each product. Are you getting the picture? How much to price each product? So if they want us to find the closing inventory, they mentioned that the closing inventory is 5,000 units. So 5,000 units of finished goods were available in inventory as on August 31st, 20x5. So this 5,000 unit that was available, what it means is that we are going to take this 5,000, find the cost per unit, and then we use it to multiply. Is that not it? So let's find the cost per unit. So the cost per unit based on the weighted average cost method, it means you are going to take 2,554,600 divided by what? 12,000. So what do we get? So if 2,554 divided by 12,000. So we are having 212.883. So now if you want the closing inventory value, It means that it's going to be the 5,000 units times what? The 212.883. So what do we get? So 5 times 5,000 units. Okay, so we end up getting 1 million. So we end up getting 1,064,406. So 212.883 times 5,000. Yes, so this is what you're having in Ghana cedis. It doesn't make sense, right? So this brings us to the end of our question solving on IAS to inventory. If you have any form of question, drop it in the comment box. If you like this video, tap on the like button. If this is your first time, kindly subscribe, and then at the same time share it with your friend so that we'll have a lot of participation. Okay, until then, we call it a day. See you in our next episode. Bye.